A splendid evening it is to viewers. Welcome to Equity News on Equity Access, your cross-section of the stock markets and of developments in the Zimbabwean economy. Thank you for joining us as we broadcast live from our Hampton studios. I'm Ibn Mabunda. Let's get to business. Listed agro concern Ariston Holdings today released financials for the period ended 31 March 2019. That was the half year, and according to the report, the revenue scaled 50% to $8 million. This was mainly driven by improved export pricing. Meanwhile, the profit after tax scaled 667%. This was mainly driven by fair value adjustment reported in the financials. Of note is the fact that the corporation lamented the effects of Cyclone Idai on its Chipinge as well as Chimani estates. The cost of the impact of the cyclone amounted to $1.5 million. SeedCo Limited, another agro concern, released financials for the full year ended 31 March 2019. According to the financials there, the revenue scaling 16% as well as the profit scaling 320%. This growth in the revenue is mainly driven by price adjustments in the face of inflation. Just quickly to get into the financials of SeedCo to look at the historical performance of how the corporation has actually performed. Now you look at the stats that you realize they posted a profit of $94 million in the year 2015. Now moving right from there, in 2019, 31 March, they posted a revenue of $73 million against profit after tax of 21.5. Prior year was 63.4 and 17.1 respectively. Now just to also to look into the Ariston financials, to look at their performance as well historically. An interesting development there with their financials there. You look at their upward trajectory from 2017 in terms of the half year, from $3.48 million in revenue moving right up to $7.96 million. Their profit position also improving from a loss position in half year 2017, then 2018 an improvement, and right there where we are sitting at 790,000 RTGS dollars. Now, right at the SeedCo analyst briefing in the afternoon, the finance director John Matorofa gave an update of their performance. Let's have a look.
The international business turnover 60 million versus same period prior of 65. PAT 3.7 million versus last year of 4.3 million. The profit before tax was 6% below last year. On the cotton seed business, the performance remained positive, although there was a small decline in the profit, but they still posted a reasonable profit of 2.2 million versus last year of 3.1 on the back of reduced volumes, 7,300 metric tons versus the same period prior year of 8.4. The local prime seed vegetable business still performed very well. It was a significant turnaround from a previous year loss to a profit of $1 million. So overall, our earnings up, operating from continuing operations, profit 21.5 million versus last year of 17. Largely driven by the positive contribution from the SeedCo International and the JV, in addition to the cotton seed business, and also the increase in the soya and wheat. There's still huge demand for those crops.
Also at the analyst briefing, the chief executive Morgan Zwere also did shed light in terms of the operations of the group beyond the borders of Zimbabwe. Let's have a look.
This drought situation became particularly pronounced in East Africa, in markets like Kenya and Tanzania, where they normally receive their second rain, January, February, March rains only started coming in April. So they came after cut-off in terms of our year, and as a result, that second season was actually lost. In terms of Zimbabwe and the post-election socio-economic challenges, I think we are all fairly aware of what happened. Obviously, it did create a huge problem in terms of pricing. I think a number of you will recall we tried to increase our selling prices, and those increases didn't last for long because we were summoned to come and discuss them, and we had to make some adjustments. When you look at the other markets like Nigeria, DRC, Malawi, the environment has generally been a tense one because of the elections that were taking place in those markets. In Kenya and Tanzania, the second season rains didn't come.
Listed mining corporation Bindura Nickel Corporation issued a cautionary statement this morning indicating a delay in the publication of its financial results for the period ended 31 March 2019. Reason being the monetary policy pronouncements that were issued by the central bank in February of 2019. Meanwhile, Zimplo, another listed concern in agriculture, released a trading update for the 5 months to the ending of May of 2019. According to the trading update, the revenue scaled 86%, driven by the Milli brand, which saw volume scaling 49% in as far as the export market is concerned. Of note as well is an 800% revenue growth in terms of their operating profit, which reached $13 million. Well, this was according to the chief executive Vimbai Nyakujga. The Zimbabwe Stock Exchange posting a profit of 200% to the tune of over 250,000 United States dollars in the 2018 financial year. The Zimbabwe Stock Exchange was incorporated in 2015 in a 30-68% shareholding between government and local brokers. Beyond the continent, tech giant Alibaba is set to list in Hong Kong as the corporation seeks to raise over $20 billion in investor funding. This concludes our evening news. Up next is a look at the news. Please don't go anywhere. Welcome back, viewers. It's now time for News Review, and with me is Chief Analyst Respect Kwenzi. Respect, good evening and welcome to the show.
My pleasure, Eben. Good evening to you too.
Fantastic. Now, let's get the ball rolling. Interesting sets of results that we've got today, and it seems as though we are just talking about the agro businesses.
Sure.
Now, let's start by talking about Ariston. One of the issues that was presented in the financials is the fact that they have been hit hard by the cyclone, losses of about $1.5 million. How important do you think that is to the progression of the entity?
So, what has been highlighted by the group is that of the 1.5 million in damages that were recorded, they were mainly to do with infrastructure, but the orchards were not as significantly affected, and therefore the produce, especially in the year for the year in 2019 onwards, is not significantly affecting production. But issues like bridges, roads, storage facilities and so forth, they were obviously affected in the period under review. But also to look at the particular estate which was affected, it's Roscommon Estate, and this is the smallest among all the three key estates under Southdown Holdings.
Okay.
But then it has got high quality tea ahead of other units. And so it should come back to life very soon. But in terms of performance, I think I'll delve faster into that. They managed to record an increase in terms of revenue, but the significant growth emanated from changes in currency and also issues to do with price fluctuations on the local component side of their own sales, and even export sales as well. They were partially up on last year. I mean, they were slightly up on last year. This is what drove their top line performance. Getting into their operating performance, I think they had issues to do with a significant adjustment in operating expenses. Operating expenses were much impacted by the shift in the currency, which obviously affected suppliers' engagements with them. Suppliers hiked their own prices, and so it had a big or huge impact on their operating expenses, which then affected their operating income. But their net position in terms of net profit went up significantly, but this is mainly due to the realization, fair value adjustments which was done on the crops that are yet to be sold in the second half period. Those crops were revalued when the exchange rate came into effect, and all those crops are destined for the export market. So suppose they were 1 million and they are destined for the export market, it means you have to multiply by the interbank market to come up with a value which is now in RTGS terms. So those are some of the key highlights in terms of the company's performance.
Just very quickly, in terms of their revenue, according to the report, contributing to the growth in revenue has actually improved export pricing. Are they likely to continue enjoying that luck that they
so they play in various markets. Predominantly macadamia is targeted for the Chinese market. As for tea, it's usually for the British market via South Africa. The same as their avocado produce as well. And so Chinese demand for macadamia nuts has been very strong. Of course, we are projecting that the Chinese economy's growth might slow down in the coming years, but lately they've enjoyed that good run in terms of having significant demand emanating from that market. So I think what they're forecasting for the second half period is that prices will remain firm, and they're also likely to reap good from the export market. So I anticipate that they will maintain that momentum.
I realize. Now let's talk about SeedCo. The revenue, they're growing by 16%, while the profit after tax scaled 320%. But of interest is the fact that the 16% growth reported for the full year is much to do with price adjustments in the face of inflation. So I'm not sure whether we can relate to that as real growth, or maybe
so
talk about something
SeedCo
else.
is a sensitive counter. It's a sensitive business as well. Mainly because it touches on the heart of the nation, the country has got a real focus on agriculture, and so government is a big participant in that market. And also food prices are mainly determined by a product that originates from their seed. So it's really been difficult for them to maneuver in terms of pricing, and so at some point they obviously had to respond to fundamentals, and they adjusted prices. But lately, the growth levels that they should have realized, when you look at the average market, which is showing a growth of more than 42% in 2018 in terms of inflation, I think 16 is a very moderate, is a very low growth in that respect. So that growth obviously emanated from price gains, especially in the market, in Zimbabwe's market, and so it's not really up to the market average levels that would be expected, or in terms of that growth. In terms of profitability, that huge jump is mainly from discontinued operations. This is operations, the gains or the profitability that emanated from the regional operations, which were divested from the SeedCo Limited into SeedCo International, now listed primarily on the Botswana Stock Exchange.
And then, of course, they have a stake in SeedCo International. An allusion was made to the growth prospects across the continent. Would you just want to shed more light where that is concerned?
Yeah, for Zambia, which is the second biggest market after Zim, there is an expectation that there will be growth in terms of seed sales, mainly driven by government's reintroduction of support to agri farmers, a similar command kind of or an input scheme which is funded by government in that country. So there's definitely prospects of growth in that respective market. They also mentioned Kenya and Nigeria, and obviously those markets as well are looking set to grow, but there's been an issue to do with Tanzania and Kenya, particularly due to the impact of what do you call it, of the drought. And that drought is affected demand of the crop in the just ended season. So going forward, I think there are prospects of growth in those key markets. The company is heavily investing in research and development across the region, and there's a sure growth prospects that are in line.
Well, thank you, Respect, for the perspective. Viewers, please stay with us. Up next is a look at the stock markets. Don't go anywhere.
Good evening, ladies and gentlemen. Welcome to Markets Daily on Equity Access. My name is Anis Chumbumu, and joining me here today is Chief Analyst Respect Gwenzi. Respect, good evening. How are you doing today?
I'm doing just good, and you?
I'm all right. Quite an eventful day for you today.
Definitely.
Okay, stock market has continued on a rally, coming up 4%, but volumes have been coming off for the past couple of days. I would probably suggest there's been a lot of bidding that has been happening on the stock market. Not much of letting go of share of stocks by other investors. So probably this is why our stock market is going up. I mean, all share index and actually 3 of these 4 indices were up by 3%. The north of 3%. The industrials index is now at an all-time high of 668.49 points. All share index is at 200.22, and the top 10 index is now at 193.33, boasting of a 33.3%.
The biggest drivers of today's performance were particularly Econet, Cassava, as well as Padinga. Those are the big guys who managed to push the market up. I think the margin of gains on a daily basis, it's back in those higher levels. But you noted rightly, volumes are quite low. This is mainly because investors are choosing to hold on to their scrip, which means we might likely to see that sustained growth which we're talking about over the past few days. And so there's obviously an expectation that the market might rise further, but it's also coming amidst the jittery in terms of what's expected on the interbank. There's likely to still be currency volatility. In fact, the currency should maintain its upward, its losing trend compared to the US dollar. Looking at the top performers of the day, obviously they were mid-tier stocks, but they were helped by the heavy caps, which included Delta, Cassava, and Parenga. Now to move on to the interbank.
The interbank did come up again to 5.91, closing in on a very solid 6 now. It has continued on its weakening path. The parallel market has somewhat stayed a little bit stable today, although some traders were putting in bids of around about 9 thereabout. But I'll suggest maybe 9.3 and 9 may be a little bit too exorbitant for the rest of the market. I wouldn't know really how much of an appetite and ability that the market has to uptake US dollars at that kind of rate. The old mutual implied rate has weakened, much to do with a 2% decline on the JSE, while our local bourse did come up. So that disparity has increased. So I'll suggest also there could be an effect of an exit pricing method happening there with our local bourse, where you find that bids are keep pushing the old mutual stock here on the local bourse up, because a lot of investors are trying to find themselves out of the Zimbabwean situation.
That has been one of the way of exiting the market, where investors are pumping into stock which they can easily trade on the JSE and the cash out of their positions. But my comments would really be on the interbank rate. I think it's not truly reflective of market fundamentals. There's definitely been a government's visible hand by a third force, which obviously I would presume might be the central bank. But this has mainly been due to the cap that has been that have been put on daily trades, and therefore we are not seeing as much liquidity as we would expect. And the clear reflection of this is through the wider variance between the interbank rate and the parallel market rate. And so there's definitely a squeeze in that market. There's no liquidity, but the rate keeps on going at a snail's pace. But that causes for a wider variance between the interbank and the parallel market rate.
All right, thank you. Respect. There has been a very topical discussion and actually an article by one of Respect's journalists today. 3 currencies in 1 year and still counting. Do not forget to like, follow, subscribe our YouTube, Twitter, and Facebook accounts at Equity Access, and do visit our website www.equityaccess.net. Good evening.